Let's now move on to some of the footprint functionality. Okay, now what I want to talk about here is, why and how to use different time frame rotations, how to choose rotations, some time-based or how to know whether you use time-based or not, what styles to use, and etc., etc. So I'm going to go through this one by one with you on the chart now, and hopefully you'll get a better idea. So the first question is why and how to use different time frame rotations. Okay, so what do we mean by that? Well, in Unit 2, I discussed with you that when we go and we modify the footprint, we've obviously got, in terms of the source, we can choose between a number of different source types. Now, note throughout this course, I'm only ever going to use two types. One is a bar, one is a point and figure. Not because the others aren't potentially good options, but because this is where I've developed experience and skill over time. I feel I can organize the information in a really good way just utilizing these two. Now, bear in mind, guys, you can go through the different options here. What I would say is, though, the minute you start to go through these options, just make sure that the option you select is adding value to your decision making. Okay. So the first two obviously is why and how to use the different time frame rotation. So the first obviously we spoke about, we had a bar, which is a time based, whereas a point and figure is a rotation based. In other words, the market will only create a rotation once it meets a certain criteria. Okay, so now once you've chosen your source type, then we need to look at obviously the types of styles. Now, within the point and figure and the bar, you can select any one of these 5 styles. Now, again, throughout this course, I'm only going to spend time talking, bid and ask as well as the imbalance. And the reason I explained to you in Unit 2 was very simple. Things like volume and delta, you can get that same information utilizing both these styles of bid and ask and imbalance. Right? As for the profile, again, I don't need that style here. Why? Because I have both a profile tool added, which I'll show you how to do in a minute, as well as obviously I have a tool added, but also you don't need this in terms of making decisions based on the footprint. Okay, so that's where we're going to start now. Just again, I've made a note here. Just remember, guys, a tool is there to extract information based on the strategy you wish to execute. Okay, so what that means is that, like I said to you with these color lines, all right, we've identified a potential breakout strategy around the 58.61. Okay, so what you want to utilize the tool is you want to develop an understanding of what the price action or what the interaction looks like around that breakpoint and once it breaks out. Right, so the tool is just there to give you information about the strategy you're trying to execute, which is a breakout. Right, so the strategy always comes first, and then the utilization of the tool and the information from the tool sort of almost acts as a backup. It's almost like a confidence that, actually I expect to only see buys at this breakout. The footprint tool is showing me those buys, therefore the trade is very, very valid and I can confidently execute. Okay, now, the next thing to talk about is, once you've obviously, in terms of, you've got the two options under the source, we can choose the time-based bar source type, or we can choose the point and figure type. Now, the question a lot of you are asking yourself is, what sort of time should I use as a function, or what sort of, rotation should I use? Now, the first thing I'm going to say to you is, it depends. Okay, that's the most crucial thing. So if you are a long-term trader, a swing trader, right, you want to set your footprints to potentially longer time based rotations, maybe daily, maybe 60-minute, maybe 30-minute. Okay, so it all depends on what sort of information you're trying to extract. Now, what I will say, you'll see me utilize throughout the strategy sessions predominantly shorter term time frames, maybe the 5-minute, maybe the 1-minute, okay? And I'll explain to you why. A lot of the strategies we're going to utilize are more focused on, momentum or, risk event trading. And for that reason, I need shorter term information. I need to see interaction between buyers and sellers on a shorter time frame so that I can make decisions on the strategies I'm trying to execute. Okay, so what do I mean by that? Well, it's simple. If I go and, for instance, if I want to trade a breakout of a previous day high, or maybe a previous swing high, right? The interaction is going to occur very quickly and very aggressively around this 58.61. So for me to use a daily footprint might not be as effective as, say, using a 5-minute footprint. Okay, so why? Well, because obviously on a 5-minute footprint, I can really zone in to specific areas and see how the buyers and sellers are interacting just before and just after that breakout. Okay, so that's the first thing to understand. Apply the time based on the strategy you're trying to execute, all right? If they're momentum strategies or fast money strategies, then you do want to be utilizing maybe shorter time-based footprint rotations. If, however, maybe more swing-based, maybe you're holding on to a trade for an entire day or a couple of days, then by all means make sure you're utilizing 30-minute, 60-minute, and daily time frames. Okay, so in terms of the rotations then, okay, so that's the time-based. Now in terms of rotations, how to select the best rotations, this all depends on the market you're trading. And again, I'm just going to take a snapshot here for you so that you can see effectively some of the options available to you. What I would say, guys, so important, is there's no right or wrong here. It's all about preference. Okay, so the way I utilize or the way I set rotations is very simple. And again, like I've said, don't complicate and keep changing. Once you've selected a rotation, stick to it. Okay, there is no right and wrong here. That's the key. This is just about, what is maybe a slightly better option. No right or wrong though. Okay, but once you have found something, just stick to it. So if you're trading bond markets, what I would suggest is find out what the basis point per rotation is. Very simply, there won't be too many of you trading, for instance, German bunds, but currently German bunds are roughly around 14 prices per 1 basis point. So for me, what I'll tend to do on German bunds is I will look at half a basis point moves and I'll utilize a rotation of 7 prices. Okay. In terms of the equity indices, I like to think in terms of percentages. All right. So for me, I like to look at 0.1% increments. So in the SPOOs, this might be 12 ticks. In the DAX, this might be 15 ticks. Whatever it might be, go work out what a 0.1 percentage move is in the end equity index and apply this to your rotation. In terms of the FX, I like to use 10 pips. Okay, that's for all FX markets. In terms of the commodities, I like to use a 10 tick as well, simply because a 10 tick move in gold or 10 tick move in oil or nat gas, whatever it might be, is equivalent to $1. And then I've noted here in thinner markets. Okay, so when you have a market that's really thin, i.e. maybe the DAX, the nat gas, the Bitcoin, you want to choose the rotation that can ultimately extract information in a meaningful manner. Okay, the problem is with these thinner markets is because there's a lot of spread maybe between the best bid and the best offer, or there's a lot of untraded prices. Just having maybe a 5-minute maybe having a 10 tick or a 20 tick rotation, it won't show you any meaningful information. If anything, you're probably not going to see enough. Okay, so in those instances, again, maybe you want to use, say, a 20 tick rotation in the DAX, or maybe in the Bitcoin, maybe a $50 rotation, just so that you can pick up on the information being shown. Okay, now let's quickly go and apply some of this to the tool. So what we've got obviously is an oil. Now if you want to apply a rotation, a 10 tick rotation to the oil, we're simply going to right click on the tool, modify the footprint, check that our source is point and figure, which it is. Now once we've got that point and figure as our source type, you simply want to click and choose on the reversal. That's ultimately your rotation. Okay, so note, we said for oil we want to use 10 ticks simply because it's equivalent to $1, and we then just going to simply go and push OK. Okay, and you'll see now what will happen is the oil will only create a new rotation once it goes 10 ticks in the opposite direction. Okay, so we can see obviously this morning, based on this current rotation, we've had quite a long rotation. Right, this rotation started, as you see if you hover over. This rotation started at 10 o'clock this morning, and it's now simply been going on for almost a good 48 minutes. Okay, now where rotations are very, very effective, and again, we'll talk a lot about this in strategies in units 6 to 15, but the rotations are very good for flows, or when there's a general auction in the markets are trending in what direction. That's when I would tend to focus a little bit more on rotations. Okay. In fact, before we move on, let me just bring up the next, this whole sort of discussion that we're going to have now. So this is what I'm talking about, is how do we know when to use time-based or when to use rotation-based? Okay, and the simple answer is there is no right or wrong. It all just depends on the strategy. Okay, remember what I said to you right at the beginning. You don't want to utilize the tool to make decisions. You ultimately want to have a strategy in mind, whether it's a breakout, a fade, an extreme high, an extreme low, and you want to utilize the tool to extract the information that will allow you to execute the strategy effectively. Okay, so for me, I use both. And as you'll see when we go through the 10 strategies, you're going to see me use that. You're going to see me interchange between the two and give you understanding as to why one is better for that strategy than the other. Okay, but what it comes down to in simple terms is some examples. If I'm looking at daily positioning, okay, so like I showed you that oil, I want to see, where the real pocket positioning is, what the delta is looking like on the day-to-day. What I'm then going to do is I'd far rather use a time-based, okay, so like I showed you, I'd get up a bar and simply make it a time-based. Okay, if I'm a swing trader, maybe I might have a bar, but maybe use 30-minute or 60-minute time-based. Right. When I'm trading things like central banks, so macro events, central banks, economic data events, in this instance, again, I prefer to use a bar, okay? However, this time it's going to be shorter time-based, so it's going to be maybe a 1-minute or a 5-minute bar time frame. Then, in terms of a strategy of breakouts or maybe the cash open of markets, I always prefer to use rotations. Why? Because that's when we tend to see initiative or fast money or flow or, trend in the market. So in those instances, I prefer to use rotations. And then obviously in terms of swing trading, again, if there's good trend in the market and you're a trend follower, rotations will be better. Obviously, if you're maybe a day trader, day swing trading, all right, you might argue that 30 or 60-minute time frame rotations are better. So it all depends, guys. What I want to, and the purpose of this unit, is to show you that you have the functionality of either choosing time-based or choosing rotation-based. Now, the one main advantage and disadvantage of the two, it's very simple, okay? In a time-based, rotation, as you can see, you've got a relative understanding. What do I mean by that? In other words, you know that every one of these bars is equivalent. You're comparing apples to apples. So you can say, in this instance, all the apples were equal. We were really balanced here. The market was struggling to move. We then suddenly had a break. And on this apple, what you would have noticed is maybe there was an increase in volume, increase in volatility relative to the previous bars. Okay, so time allows us to compare things on a relative basis far better than on a rotational basis. Okay, that's the major advantage of time-based. The major disadvantage of time-based, which happens to be the major advantage of rotation-based, is that a lot of the time a time-based doesn't show the auctioning or the trending as well. Okay, in other words, what we can see, if I flick between this and I go and I say modify, and we move this to maybe say a time-based again, okay, what you'll notice is that we can't really see any kind of effective trend here. Okay, all we see is maybe a lot of noise. It shows us a lot more information. If I was to zoom this out maybe and put it on a little bit of a longer time frame, okay, again, we can still see, kind of a lot of rotation. But if we go and compare that and we put this back onto a rotational and we simply go and make it a rotation again, we can see that actually there's quite a significant, initiative in this market. There's quite a significant trend early on where the market is really struggling at the moment to retrace in the opposite direction by 10 ticks or more. Okay, so that's the major advantage of time-based and the major advantage of rotation-based. And again, lean on those advantages, but only utilize those advantages when it can add meaningful information to the strategy you're trying to execute. Okay, so hopefully that gives you a little bit of a better understanding. Now, what we're going to move on to is, which are the tools to add to your footprint. Okay, now what I'm going to do is I'm going to forewarn you that don't be sucked into thinking adding a whole bunch of tools is going to make the footprint more valuable. Okay, remember the footprint in a nutshell as a tool is simply showing me the interaction between buyers and sellers. That is the whole purpose of a footprint. It shows me how a buyer and a seller interact with one another. So what you don't want to be caught doing is suddenly adding other tools that are ultimately deviating from the original purpose of the footprint tool. However, that being said, I am going to show you some of the tools you can utilize. Okay, so you're simply going to go and right-click on the footprint, and we're going to add a study onto the footprint. Now, if you click on the drop-down, you'll notice there's all sorts of different types of studies you're going to add. What I would suggest, the ones we're going to focus on will be obviously basic strategies or basic studies, and then obviously the other one will be the market delta studies. Now, the most important that you must add is this FPBS. And the reason is it's a summarized version of the footprint. So it's showing you, it's almost like a summary of exactly what's going on. It's like a snapshot of all the information that is in the rotations. Okay, now what I would say before we move on, let's simplify this. Again, you don't want too much at hand, so simply right click on it, modify it, and you want to then come and look at the display. Okay, so what we want to do is we definitely want to keep volume. We want to keep that there. We want to keep the delta and the delta day, but we don't necessarily want these other things. Okay, if you do want them, don't untick them. For me, the most important three are volume, delta, and the delta on the day. Okay, so now that you've got that information, some of the other studies you can add, I'm going to show you a list of them. These are studies I would have on my tool, and some of the other traders would have. A simple moving average. Okay, again, this doesn't necessarily provide a strategy, but again, it allows us to see when a market is either balancing, i.e. the moving average is quite flat, or when it is trending, i.e. when the moving average is almost sloping quite aggressively to the upside or downside. Right, then obviously the weighted volume average price. Again, something I keep on my footprint just simply to see where the weighted average price is. Okay, reason being, sometimes the market will be hovering in and around the volume weighted average price. In other words, if this was the volume weighted average price, if a market is doing this all day, effectively, it's showing us a relatively balanced market. Okay, in that case, you don't want to be applying aggressive type strategies. Right? Obviously, sometimes what happens is the market tends to move away from the weighted volume moving average price all day, and you simply see the weighted average price moving down with the market. In that case, this is the kind of market you don't necessarily want to fade, but rather you want to be sticking to trend following strategies. Okay, then obviously we can add the volume profile as I showed you in Unit 2. Again, only if it's going to add value to the tool should you add it. We've obviously added the FPBS. And then the last one, which is quite a nifty little tool, is a nice divergence tool, which I really, really like. Now, to get that up, let's just right click again on the footprint, modify, and go into, right click on the tool, add a study on the footprint, and come onto the market delta studies. Okay, and you'll see it's simply called delta bars. Now, what the delta bars are is it just simply shows us the delta, i.e. this line here in the middle. So it's the net interaction between buyers and sellers in every rotation, but it shows it to us in a different graphic of a bar chart. Now, this is a wonderful tool. Again, it's a lovely divergence tool. You should all know what divergence is. But effectively, what we don't want to be seeing is we don't want to be seeing a market trending, taking out new highs, breaking to the upside, but the delta going negative. Okay? As a general rule of thumb, as we explained in Unit 3, you always want to see the delta moving in the direction of price. In other words, as prices move up and we trend up, we want to see delta go positive. Likewise, as prices go down, we want to see the delta move downwards. Okay, so that's effectively what the delta is. Now, what we can see is, at this current time, we've had quite a lot of positive delta early on the morning, and prices navigated nicely higher. Okay, so again, you can go and utilize this as a divergence tool. When we see higher, or nice positive delta and price moves up, that's good. When we don't see that, when we see price moving up but delta goes negative, we want to put some lines in there. Again, maybe use different colors to illustrate divergences in the delta relative to the price. Okay, so that's some of the tools you can utilize, obviously with the footprint tool. Now, the last thing I want to talk about is back testing. Okay, so a lot of you, once you've done the strategies, you're going to want to go and learn how to, or you're going to want to go and search for these strategies and maybe look at previous days. So it's very simple. Okay, you can. There's two ways you can back test. most important thing to understand is that to go and look at a previous date, you simply right click on the date at the bottom or the time at the bottom, and you go to date. Now you'll see at this current point in time the go to date is grayed out. Now there's a very good reason for that. Okay, you cannot go to a specific date when you have put the setting of the market or of the footprint on a rotational basis. In other words, you can only go back in time and look at a specific day when the footprint is set onto bars. Okay, so you simply right click, come into the market profile, the footprint chart, sorry, and click on bar and say OK. Now when you right click on the time and go to date, you'll simply see a date pops up, and we can select any date. We can go to the 4th, we can go any point in time so long as we've got the data. Now as a point, as a rule of thumb, if you can't get a certain date or you're not getting data at a certain date, I'm just going to take a picture here for you again so you can keep a note of this. But sometimes what happens is you won't be allowed to effectively go back in time, and that's simply because you either don't have the data, okay, so you haven't paid for the data. Remember, your trial will only give you 6 months as standard. Maybe if you do actually take up the software, you do only get 6 months as standard. So if you want to go further back, you do need to pay for that. Or ultimately, if you can't see any data, the continuation settings aren't on at that point in time. In other words, what's happened is you haven't selected continuation settings, and the chart can't show you the information because of that setting. Okay, so to get rid of that setting, you can simply right-click at the top, you can right-click at the top and just click on the continuation settings, and then it should show you data on your chosen time. Okay, now just in terms of the back testing, do note a little trick. Not many people know this, but if you do want to actually still see what the rotation, say now you want to look at a breakout and you want to see what the rotational footprint looked like on that breakout, you can apply this little trick. Okay, so simply go to the date that you want to look at the breakout. So let's say that day occurred somewhere in December. So you click on the day and you say okay, it'll then go to that breakout point. Now note, what you'll see there is the time-based rotations on that breakout day. So simply right-click on it once you have the day and modify it and change the source to a point and figure with your rotation on that day. And you'll see it'll simply stay on that date, but it'll then show you a rotational rather than a time-based rotation. Okay, neat little trick. Not many people know that, so keep that a secret to yourselves. Okay. So that's then the end of the end of the section 3 of Unit 4. Let's now move on to the last section. This is going to be all about advanced footprint application. This is quite fun actually. I quite like this part. And what we're going to talk about here is highlights for marking your footprint, conditional formats for marking your footprint, as well as obviously adding price alerts to your footprint, and then some of the more nuanced modifications you can make to your footprint tool. Okay, so let's get started straight away with it. The first thing is the highlights. Now, if we right-click on the footprint again and we left-click on the highlights, you'll see this little empty box comes up. Now, all that the highlights are is that it's an effective tool for outlining outliers. Okay, so what do I mean by that? In other words, let's say we wanted to see when there was a really big pickup or a really big imbalance at a certain price. Okay, we can simply left click on the imbalance, shift it across, and what we can tell the tool is that whenever there's a buy imbalance bigger than, say, 500, highlight it for me. Okay, and put a nice nifty color. Now, obviously there might not be any imbalances here when in fact, let's change this so we can get some imbalances so you can see it work nicely. Bar chart, okay. Alright, so straight away you can see some nice purple boxes. So what these purple boxes are showing us is that when, as I've set up, when there is a buy imbalance with quite a big threshold of 500, it'll effectively highlight that imbalance for me and point it out for me. So it's a very effective way of highlighting real big shifts. Okay, and you can play around with this. Obviously, you can create all sorts of highlighters on the left. The trick with this again is you need to know maybe let's say we add volume. Let's say if the volume gets bigger than 1,000, or then we can apply it. give me maybe a yellow box. Okay, you need to go and determine, obviously with oil, in fact, let's make that a little bit lower. Okay, so again, what that's going to show us is when we have volume that exceeds 500 threshold, it'll highlight it for us in yellow. So you can go play with those highlights. Again, go and see if some of them can add value to your trading. For me, I would definitely focus on volume delta, and the imbalances. Okay, now do note, remember guys, you can see lots of yellow boxes here now, as it's showing me wherever there's volume higher than 500. We can see purple boxes. So the moment we start highlighting certain things, we're adding more noise. All right, so what I would say with the highlights, add outliers. So in other words, what would be an outlier, for instance, in oil, is if we see 1,000 lots trade at one price in a 5-minute time-based rotation, that's quite significant. Okay, it's telling us there's quite a big shift in the volume, and in that instance, I think having a yellow box is worthy. Okay, now the next one is obviously the conditions. So let's right-click again, and let's click on the conditions. Now, this is a wonderful tool as well. This is more, think of this more as like as a signal tool. All right, so a signal occurs from the market and it highlights it for you. Now, I'm going to show you two different signals that I utilize. And the first one is the inside bars. So you can click here on the left. Again, you can add it to the box. And what we're going to do now is we're going to create some sort of an arrow. So this is going to show us when we have an inside bar. Okay, and we can make the size nice and big so it stands out. So what we're looking for now is potential inside bar. So you can see right in the middle of the screen the market. I'm just going to close this. Okay, so we can see it's showing us that this rotation is an inside bar of the previous, and it creates a nice purple line. Okay, so it's a nice way to create certain types of conditional signals. Now, some of the other signals I'll use will be obviously inside bars. Potentially outside bars are really effective as well. That's like an engulfing bar. We also then have potential daily high and low, i.e. when we break daily highs and lows. So you can go through each one of these. What I would suggest, again, don't focus too much on this. This is just something you can utilize later on once you are up and running and effectively executing strategies. Okay, if you do want more information, obviously note it does explain the condition for you in the bottom, so you can effectively get a better interpretation of what every one of these conditions does. Okay. Now the last, or the second to last, sort of signal we can utilize, again, if we right click, we can go and add certain price alerts. Now, this is fantastic for breakouts. Sometimes maybe you're a little bit distracted or you're trading multiple markets and you don't want to miss out on something. So what we can simply do is we can click on the box and we can go and create a new signal for the CLE, which is oil. And we can go and say, if oil gets above price point 58, what I want you to do is effectively make a nice beep for me. Okay, so you'll see if the price of oil gets above the price of 58, it's going to effectively make a price alert for me. It's going to make a noise. Now, if you double click on it, you can go and choose the sound you want. Those sounds, obviously, you can make a selection there. You can select how long it must keep going for. You can choose your own sounds, maybe play a cool song or something. Whatever it might be, guys, those options are there for you. Okay. Now, where we're going to finish off this Unit 4 is we're going to talk a little bit about modifying your footprint in order to get more meaningful information. So we're going to right click on the tool again and we're going to come to modify footprint. Now, you've heard me talk a lot about imbalances, and that's kind of what we're going to spend the rest of the section talking about. Okay, so the first thing to do is to obviously get an imbalance, obviously under the style, and we're going to select here imbalance. Now, again, I spoke very briefly about what an imbalance is, and I'm going to go through it again in detail. Okay, so an imbalance is nothing more than a footprint where whenever there is a significant difference between the diagonal, okay, it's no longer horizontal, it's now diagonal. So in an up move, whenever there's a really big difference between what the buyer bought versus what the seller sold, it creates an imbalance. Okay, and we can see these imbalances highlighted in the red on the left and the green numbers on the right. Now, what does it mean? Well, it's simple. An imbalance simply means, as I explained to you in Unit 3, it's where there is quite a significant shift in the interaction between the buyer and seller, because we're shifting from prices. As we move up, prices are shifting and the interaction is shifting. So we can now set, with the footprint tool, we can set what that shift should look like, okay? And that's what we're going to do now. We're going to go and play around with all these options on your imbalance. Now, the first thing to talk about is this button here called the threshold. Okay, so what a threshold is it's a way to eliminate a lot of the smaller traded volume or imbalances. In other words, if I don't want to see low volume imbalances, i.e. imbalances created maybe by algorithms, I can set the market to only show me when there is volume above 50 lots. So as the minute I push apply, you'll see effectively we almost lose all of our information. So let's try and maybe make that 5 instead. And we can see that there's a lot of zeros now. Okay, now in other words, obviously where there are zeros, the volume was lower than the 5. Okay. So what I would suggest, again, stick to the threshold of 0, but that's what the tool effectively does. It ultimately just reduces the amount of information you can see. Now, in terms of the imbalance, this is the percentage of imbalance in order to show either red on the sell side or green on the buy side. In other words, if I make it simpler, I'm going to make it 400%, which means 4 times as much volume. Okay, what happens is, in this example, we can see that there was 4 times more volume bought than sold. Okay, so obviously 19 times 4 is 76. So we can see that there was 4 times as much, or more than 4 times, and therefore it's created an imbalance. Okay, likewise, to the sell side, we can see obviously there was 88 sold versus 10 bought. That's roughly 8 times. Therefore, because it's more than 400%, it creates an imbalance. Okay, again, we can see obviously it's done the same thing in this instance. Okay, now again, just to point out that imbalance, I would suggest as a rule of thumb, keep that imbalance between, I would say, maybe 200%. Don't go less than 200%, but equally don't go more than 500%. Otherwise, you're going to either have too many imbalances or too few imbalances. Okay, then the last one is obviously this minimum difference. All this is showing, and again, this is why I prefer to keep the threshold 0. If you do want to eliminate some of the noise or some of the imbalances created by algorithms, this is where you can select a minimum difference between the diagonal prices. In other words, if I select, say, 50, what it's going to do is that whenever there is a less than 50 contract difference between the two, it's not going to show me the imbalance. So if I went and I made, let's say, an imbalance of 80, or sorry, a difference of 80, you'll notice as soon as I apply, that imbalance disappears. Why? Because the difference between 10 and 88 is 78, which means the minimum difference threshold is not met. Okay, so again, that's a way to eliminate some of the imbalances created by small orders. Okay, remember, the most important thing to understand about an imbalance, as we spoke about, imbalances are where there is a shift in initiative. Okay, now, ideally, we want that initiative to come from larger time frame participants. Therefore, small order imbalances are not as relevant as large order imbalances. Okay. Now, what we're going to talk about is just in terms of very briefly, you can set thresholds for just the traditional bid and ask style. Note again, this is if you don't want to see too many small orders, you can simply set bid and ask, and again, set some sort of a threshold of 50, and again, it loses all the data because it's too high. Okay, so keep the imbalance to 0. It's probably going to add a little more effect down the line. Okay, now where I want to just move on to is some of the display options. Again, we're going to right click on the footprint, modify, and we're going to start to spend time on this tab called display. Now, again, this is not something I want you to spend too much time thinking about, but to know that the option does exist for you. Okay, so obviously the shades here in the cell setup, well, before that, obviously, we can see we've got different shades of green and red. This is where you can select the shades of green and red. If I push apply there now, you'll see my green changes to a brighter green. In terms of how many shades you want, we did speak about this, but again, this is just simply, remember the shades is an algorithm that is designed to allocate a shade based on the relative difference between the deltas. So If you wanted a lot of relative differences, you can select 14 shades or 16 shades or 18 shades. For me, I would stick to either a minimum of 4 shades. In other words, you will only have 2 blue shades and 2 red shades. Or I would stick to a maximum of 8 shades, where you have 4 red shades and 4 blue shades. Okay, anything more, again, you've got to question, or you may be overcomplicating it. But that option does exist for you. Then obviously sometimes we do want to add a candlestick, just a traditional candlestick bar on the left side of the footprint, so we can see the open, the close, the high and the low. To do that, we simply just select the size of it. We can make it nice and big too, and we'll see obviously that candlestick pops up on the left side. Okay, then the last bit is just some of the options available here to you. Obviously with the width, you can select, how wide these boxes will be. In terms of obviously the redistribute, you'll have sorry, bear with me for a sec. So in terms of, okay, what we found here is you've got a whole bunch of functions here. You can shade, obviously, some of the, the reverse shading, just instead of having red for more selling, instead of having a lot of delta in a darker shade, you can flip it around and say, when there's a lot of delta, whether it's negative or positive, make it the lighter shade. Okay, so that's all the reverse shading is. In terms of the dominant, again, this is really good function if you want to, if you're a bit more of a flow trader and you only trade directional trend. What this will show you, it'll only show you the footprint shading in terms of the direction that the market's going in. Okay, so again, you can play with those options. For me, what I'd suggest is keep it nice and simple. Okay, if you do update this and you get the latest version of the footprint tool, you'll notice they do have obviously a regroup or rescale, and the rescale is just simply an auto scale. So when when you are moving around, the tool will auto scale with you as you move around, which is quite handy and can come in handy for you. Okay, now before we finish off, that's pretty much a wrap of the tool. It really just shows you the intricacies of the tool, some of the things you can do, some of the conditioning and the formatting. But where I want to kind of finish is with just one more little picture that I'm going to show you, is effectively that. Okay, still not sure. Alright, you've got so many options, guys. As you've seen, you can hover over things, you can hover over any of the functionality, and it'll give you an understanding of what the tool or what that information is. If you're still not sure, you've got the info boxes. Okay, so you can utilize those info boxes as I showed you in the conditional formats. It explains all the conditions. It shows you what it's trying to do. If that fails, you've got the help function. Okay, like I showed you up here in the live chat, as well as the the support. You've got the help function. You can search for certain things so you can better understand them. If that fails, you've obviously got the chat function. Okay, the support of CQG, Market Delta, absolutely brilliant. They're super intelligent. And what really is great, guys, if you're struggling with the software or there's a problem that you're not sure about, they can log on, remotely and help you and assist you and show you how to use the software. Okay, guys, that's a wrap of Unit 4. Make sure you get your setup ready and working. When we move on to Unit 5 now, we are going to start talking about setting up a template, and then we're going to start moving into the strategy. So do spend a bit of time making sure you've got this sorted out so that we can really move into the real fun stuff of developing strategies. Thanks for joining, and I'll see you guys in Unit 5.